Do you want your savings, the money that you've saved, to just deteriorate and just go away and be worthless? Of course you don't. Would you rather hold on to something that goes up in value or something that goes down in value? Easy question to answer. You want to hold on to things that go up in value. Okay. 3 days a week, I do this show. I call it Dollars Dead on the channel. We've got ways of getting out of debt. That's predominantly what we do. But we also talk about saving and how you can make sure that you stay ahead of inflation and your money doesn't become worthless. It's been proven that over time, the last 100 years, the dollar, the US dollar, has lost 99% of its value. So why would you hold on to dollars? Well, in my opinion, dollars are transactional. And I say my opinion because I always have to say this is just for informational purposes only. Every Friday, we go over essentially a basket of goods. We try to show you how you can do what the rich do. The rich don't hold on to dollars. Yes, you'll have some savings for an emergency fund and things like that, but you can also diversify into other assets. Why is it that during these hard economic times that we've been having, with high inflation and other things, are the rich continuing to become even wealthier, while everyday Americans and people throughout the world are feeling the pinch of just trying to do things like buy food? It's because they're investing in things like commodities, which is like gold and silver and even crypto. They're buying things like stocks and real estate. In other words, they've converted their dollars into something else because they realize there's inflation, which means the value of the dollar goes down. But the value when there's inflation of things you buy goes up. So if you convert your dollars, which are going down, into something that goes up, then you'll hopefully beat inflation and your money will not only not lose value, but be worth more. So let me explain what we do every Friday. Since February, I've been showing a basket of goods, as I call it, things that you can invest your dollars in. And today I'm going to do something very unique, which I'll continue to do in the future. And that is, I'm going to say, all right, we're going to compare all of these things to a dollar. So if you do these various things, what will you have in a year period of time? Less than $1 or more than $1? Okay. So I'm going to put up here on the screen the various things we go through. I'm going to walk you through from top to bottom of the alternatives that you can put your money into. For example, these first three are what are called dollars and dollar alternatives, all right? So savings. You put your money in a savings account. You see there the CD 3-month and the Treasury 3-month. Probably familiar with a CD or a Treasury. You give your money over, 3 months, you get it back with interest. So in February, there are the numbers. So here are the numbers. You can see that in February, savings was getting 0.46%. July, the numbers have been updated for these, 0.45%. The CD 3-month went from 1.69% to 1.53%, and the Treasury from 5.42 to 5.46%. Okay. Now, underneath here, you can see inflation. Inflation is 3%. That is year-over-year inflation. Now, it's been said, and I believe that inflation's way worse than that. It was over 20%. Things went up. They haven't come down. But we're going to go over the cents and the dollars in a moment. Then look at these commodities, right? If you had put money into gold, silver, Bitcoin, or Ethereum, February, gold was $2,050. Now it's $2,415. That's a 20% increase. Silver went from $22.88 to $29.39. And you can see Bitcoin here from $43,000 to just over $65,000. Ethereum, $2,200 to over $3,400. Why do I talk about Bitcoin and Ethereum? They're considered, well, Bitcoin's considered digital gold, if you will, and it's very different than the rest of the crypto. All other cryptos are considered to be what's called altcoins. Ethereum's the top one, first mover advantage, very large market cap. And so we look at those two. Very popular because Bitcoin had a spot ETF, meaning you can just go buy it through an ETF. Ethereum, it looks like, has been approved, and spot ETFs will be coming out on Ethereum. I've got videos on how to buy and sell gold, either physically or through ETFs, and how easy it is. Same with Bitcoin and Ethereum. Now, if you look at the market, the Dow Jones Industrial Average, that's a basket of 30 stocks that people watch, 38,000 essentially in February, now over 40,000. It's been going up for quite a while. S&P 500, 49.58 to 55.18. That's 500 different stocks. you can actually buy an index fund which has all of those 500 stocks. You might be thinking, I can't buy 500 stocks. No, you can just buy shares of an ETF index fund that mimics the S&P 500. And over time, it's been shown that I think it might be somewhere between 10 and 15% over a long period of time of money growth. That's exceptional. Then we look at, on purpose, the 2-year and the 10-year Treasury. 2-year is 4.5 right now. 10-year is 4.2, meaning if you buy one of these 2 or 10-year Treasuries, you lock up your money, you get 4.5% or 4.2%. The reason I look at this is because if there's an inversion, it's always been proven that we are in a recession. And an inversion means that the 10-year is less than the 2-year, meaning the rate you get on the 10-year Treasury is less than the rate you get on the 2-year Treasury. That doesn't make sense. If you lock your money up for a longer period of time, you should get more back. So that shows us that there's a problem in the economy. Now, check this out. I'm going to throw up what this really means on the screen. Look right here at what I put on the side. This is in cents or dollars over a period of a year. Because of the 3% inflation, again, many people believe it's worse, but if we do believe that it's 3% inflation, look at this. You put it into savings. Okay, you get about 0.5%, which means your dollar would be worth 97.5 cents. It will go down over the course of a year. Throw it into a CD 3-month, your dollar will be worth 98.5 cents. It went down. A 3-month Treasury, and you keep rotating it over and over, just like you would every 3 months on a CD, $1.02, just barely beating inflation. But we all know that most things have gone up significantly more than that. Okay, if you had put it into gold, 2050 to 2415, it's a 20% gain. You would have $1.20. All right, think of it in terms of $100. You'd have $120. Think of it in terms of 10,000. You'd have $12,000. But if you put it into savings, you would have significantly less. Silver, you'd have $1.31 for every dollar. Bitcoin, $1.51 for every dollar. Ethereum, $1.50 for every dollar. So if you look at it that way, I'm trying to point out, as you can see here, that if you put your dollar into dollar cash alternatives, like CDs or treasuries or savings, it's going to go down in value or maybe barely beat inflation. But there are alternatives, commodities, stocks, even things like real estate. What do? The reason I show this is because every 2 weeks or so, I do what they call dollar cost average. I buy certain things like commodities like gold and silver and things like Bitcoin and Ethereum. I put my money into other places. Again, don't do what I do. I don't make money or lose money whether or not you do this, but I'm trying to help people understand that what the wealthy do is they convert those dollars into assets because assets go up in value and dollars go down. I hope this will open up your eyes because I always say the government doesn't care about you. Banks don't care about you. And real freedom is financial freedom. And the only person that's going to get you financial freedom is you. So pay attention to things like this so that you can increase your wealth and be better off and have a better, brighter future. So thank you and have a great weekend.